Bitcoin, the king of crypto, is in short-term pullback mode after recently running into pivotal resistance of its 50-day moving average. Previous rally attempts over the past month have failed miserably, sending Bitcoin lower each time. But a recent change in market sentiment and price action hints that this time may be different. In this video, we walk you through the charts to show you why Bitcoin and the crypto market may potentially be setting up for a substantial rally. Before we dive in, remember to press the like button and subscribe to ensure you don't miss any future crypto videos. And as always, remember that nothing we say in our video is financial advice. This is simply our interpretation of what the charts are telling us. So let's see what the charts say. In our last crypto analysis video, Bitcoin had just recently undercut support of a month-long base of consolidation right here. And it was a one-day undercut where the price dipped below and ran stops below this obvious level of support of this consolidation at the lows. And when we saw this type of price action, we explained in our last video that when we get an undercut, that often absorbs overhead supply, which makes it easier for the price to move higher. And because of that, we said that in the Morpheus crypto portfolio, we were entering in Bitcoin, and we got in around 26,100 after this reversal. And we also said in our last video that the next stop for resistance would likely be the 50-day moving average. And that's exactly what's happened since then. You can see that Bitcoin since then steadily trended higher right up into resistance of its 50-day moving average and then pulled back, unsurprisingly. Now, we also mentioned in our video that if we saw a pullback after Bitcoin ran into the 50-day moving average, if it was a short-term pullback, we would look to hold in anticipation of another leg higher. And so far, that's exactly what's happening. In previous rally attempts before this last one, notice that back in late August, we had a big rally attempt back above the 20-day moving average, but 2 days later, we completely gave back all of that gain and went to new lows below the low of that breakout day. And then about a week later, we had another rally attempt back above the 10 and 20, but that failed as well. Now, each time these rally attempts failed, notice that it held the lows of the range. But what was different with this last reversal was that we first undercut the lows to run stops and absorb supply. And that's what made this rally attempt stick. And this time, instead of actually falling apart when we ran into the 50-day moving average, notice how the price drifted lower, held the 10-day moving average for a day or two, and then dipped below. And now we've undercut the 20-day moving average just for one day, and now we're holding at that level. So right now, Bitcoin is at a pivotal level with a one-day undercut of the 20-day moving average. This blue line, this could mark the swing low of the pullback. And if it does, that means that we're going to have a higher low that's formed on the daily chart, which is a constructive bottoming action. But Bitcoin still has a bit of work to do. Specifically, keep a close eye on these 10 and 50-day moving averages just above. The 10-day moving average is currently right here, this green line, 26,623. And just above that, right around 26,800 is the 50-day moving average. So we could see a test of that in the next day or two if we hold the lows of this pullback. So Bitcoin, as I mentioned, is really at a crucial level here. It's a solid risk reward for potential buy entry on this pullback if you keep a tight stop just below the low of the swing low. In other words, if this pullback low fails, you get out quickly. But if it holds, you've got potential reward all the way up to test the prior highs above the 50-day moving average. And if we get back above this 50-day moving average on significant volume, we could see potentially a breakout above this prior swing high, which would mean we've got a new intermediate term uptrend developing, which would be really bullish. However, I want to remind you that as we showed you in the last video, we do have a trend line we got to keep an eye on. This pink line that we drew here marks the downtrend line that's been in place now for several months. And notice how that downtrend line is just above the 50-day moving average. So if Bitcoin gets back above the 50-day moving average, then it also could potentially break out above this multi-month downtrend line. And that's where the price action could get real exciting, again, confirming a potential intermediate term trend reversal. Now, of course, that's just one possible scenario. Anything can happen, but we do have the potential for a potentially explosive breakout if we get back above this downtrend line. Overall, Bitcoin is at a pivotal level here in the near to intermediate term. Again, keep an eye on the September 25th low of 26,000 as a short-term support level. And for resistance, we've got the 10, the 50, and the downtrend line. Now let's look at the longer term weekly chart of Bitcoin. This is where it gets pretty exciting because we've got an uptrend line that's been in place now for 3 years from the lows of 2020. And notice we pointed this out a few times now over the past couple of weeks that the 50-week moving average is converging with this uptrend line that's been in place for over 3 years. So this is a really major support level here right around the 24,500 level. Again, convergence of the 50-week moving average and long-term uptrend line. And as this 50-week moving average and uptrend line rise, this could indeed provide support that enables Bitcoin to power higher. So we really like the support of this uptrend line and 50-week moving average convergence. Remember, when you're looking at multiple time frames, such as the daily chart and the weekly chart, that the longer time frame holds more weighting than the shorter time frame. So this long-term 3-year uptrend line is more significant than any short-term resistance. Nevertheless, it could be choppy in the meantime. And here you can see on the weekly chart too, notice that basically we've had 6 weeks of volatility contraction. So the longer that tight volatility contraction continues, the more powerful the eventual breakout in either direction. And based on this uptrend line, it's looking like the breakout could be to the upside. So again, keep an eye on Bitcoin in the coming days and weeks because it could be setting up to provide you with some pretty explosive opportunities. Next up, let's take a look at Ethereum as a proxy for the overall altcoin market. On the daily time frame, compared to Bitcoin, we can see Ethereum has been lagging Bitcoin. Ethereum is still below its 10 and 20-day moving averages and well below its 50-day moving average. However, as we've mentioned in the chat room over the past couple of days, Ethereum has been showing improving relative strength in the recent days. And we're also seeing constructive chart patterns forming in many leading altcoins with higher lows being formed and many top altcoins reclaiming their 50-day moving averages ahead of Ethereum. So again, constructive signs for the market. Now for Ethereum, we want to keep an eye on the 10 and 20-day moving averages just above, basically from 1600 to 1610. We've got the 5-day highs here is right at 1600. So we'll see a little pop if we get back above 1600, but then you got to watch the 10 and 20-day moving averages. So we've got significant amount of resistance here, but Ethereum also, just like Bitcoin, has formed a downtrend line from its highs of July. And we can draw this trend line here, and we see that very similar to Bitcoin, that if Ethereum gets back above its prior swing high, it will break out above its downtrend line, and it would break out above its 50-day moving average. So these are the levels we want to keep an eye on. Ethereum in the near term. For support, we want to watch the September 25th low right around 1563. And then we've got, again, 1600 to 1610 as resistance. We've got that downtrend line just above that. And more importantly, the 50-day moving average is converging. Notice how that 50-day moving average converges with the high of September 18th. So that's that level right there, around 1670 right here, is going to be a key level to watch. If we get above that, then momentum could really start to pick up in Ethereum, because that would be a breakout above both the 50-day moving average and the downtrend line. So that's the levels to watch on Ethereum. Next up, let's take a look at a few altcoins that are on our radar. In our last video, we highlighted INJ. So let's take a look at the price action in INJ since then. You may recall that we bought INJ in the Morpheus crypto portfolio after it broke out above this daily downtrend line, showing pattern relative strength on the daily time frame. Since then, INJ has been choppy as it's tested resistance of its 50-day moving average. But often when you see choppy price action on the daily time frame, when you zoom out to a longer time frame, such as the weekly chart, the picture becomes more clear. So let's go ahead and zoom out to see the big picture of INJ on the weekly chart, and we can see a different picture. On the weekly chart, we notice that INJ, the first thing we notice is that it's been holding near the highs now for many, many months, while Bitcoin and Ethereum have moved lower. So we can see the INJ relative strength on the weekly time frame pretty clearly. And if we take a look at the tight consolidation over the past couple of weeks, we see that we may be setting up for a potential breakout from this tight consolidation. So we like the INJ. If it gets back above like the 760 level, we could see a potentially explosive breakout, because that would be reclamation of the 10 and 20 week moving averages. And that would also put INJ well above its 50-day moving average. So INJ, we're currently holding it in the portfolio, showing a small gain, and we're looking at a potential breakout above the 3-week high and the 10 and 20-week moving averages because of the longer-term relative strength that INJ has been showing. Next up is ACH. ACH, if we take a look at the weekly chart, we can see that ACH recently broke out above a lengthy downtrend line that's been in place for many months. And we broke out above that about 2 weeks ago. And since then, the price action has been tight, right below the 10-week moving average. Notice last week how volume picked up. And let's take a look at the daily chart. Zooming into the daily chart, we see that ACH has been consolidating above its 50-day moving average now for almost 2 weeks. Moved back above its 50-day and has been holding, forming kind of a base above the 50. What we really like about ACH is the recent volume. Notice these big volume spikes here where volume surged to basically 500% the average daily volume, and the next day about double the average daily volume. This yellow line is our average volume. And we can see here that the price action is holding firmly above the 50-day moving average, and the 20-day moving average has now crossed above the 50-day moving average. So we've got all of our moving averages trending in the right direction. Currently, ACH is on a pullback to the 50-day moving average, and the pullback has been on lighter volume. So we're keeping an eye on this, looking for a relatively low risk entry point on ACH if it resumes and starts to head back up, following through on its move back above the 50-day moving average. So no action yet in ACH, but this is definitely one we're keeping on our radar because of the recent breakout above the downtrend line and the increasing volume. Next up is XEC. XEC recently broke out above a multi-month downtrend line on big volume. Notice how volume surged to 10 times its average daily level, and we had a big move that took it right into resistance of the 50-day moving average, probed above the 50-day moving average one day, then pulled back below it. Now, over the past week, XEC has been holding in a very tight range, holding at support of its 20-day moving average, kind of sandwiched between the 10 and 20-day moving average, with the 50-day MA just above. So because of this tight volatility contraction, if the price action gets back above the 50-day moving average, above basically the 2.48 level, we could see a potentially explosive move that at least tests the prior high from the breakout. So this is another one we're keeping an eye on. Again, with these type of setups, you need to have a tight stop. You either need to be right or be right out. So it's not in play right now, but again, keeping an eye on XEC for a potential move above the high of the past 5 days and the 50-day moving average. Next up is IMX. What really caught our attention was this huge breakout about a week ago where volume surged to about 15 times its average daily level. Absolutely monstrous volume surge. And unsurprisingly, the price also surged more than 50% in one day. Remember, volume is the gasoline that powers rallies. The more powerful the volume, the more explosive the rally. And you can see here that IMX did have a huge rally. Now, of course, it's pulled back, unsurprisingly. But notice how the pullback has held support of the 50-day moving average. And now we've got the 10-day moving average rising to converge with the 50-day moving average. And when we see that convergence, the support becomes more powerful. We're always looking for convergence or confluence of multiple support levels, which provides more support. And notice that the pullback has been on lighter volume. It wouldn't be so good if volume was just as high or higher on the pullback, but volume substantially eased, which means that the buyers are taking a rest, but the sellers are not stepping in substantially. So this is a good sign. Now, if we scroll back a little bit further on the chart, we can see that IMX is also testing resistance of a downtrend line that's been in place since July. We can see the downtrend line right here, and we briefly broke above it on that big rally day, but came back in below it. So this is going to be in play, this downtrend line. But again, if we get follow through, if this low holds and we get back above this downtrend line, we could see volume start to pick up again. So with IMX, for potential entry, we'd like to see a move above the 2-day high, basically above the 62-cent level. And Morpheus crypto subscribers should note our trade alert that we sent yesterday for our exact entry point and stop price for this IMX setup. We want to keep a relatively tight stop below the 2-day low, because if it doesn't hold the 50-day and 10-day MA convergence, we want to be out quickly. But if it gets back above the 62-cent level, momentum could start to pick up. So IMX definitely on our radar in the coming days as well. That's a wrap for today. Remember to keep an eye on this 50-day moving average of Bitcoin. If we get back above the 26,800 level and break out above this downtrend line, it could get pretty exciting. On the other hand, if we get back below 26,000 and form a lower low in this pullback, then the sentiment could flip back to the bearish side. So at a pivotal level right now, but again, based on recent market sentiment and the retracement, it's definitely looking like market conditions are improving. So remember to always use stops and trade what you see, not what you think. If you're new to Morpheus Crypto, head on over to morpheustrading.com. Drop your name and email address in the form to receive our top crypto trade ideas free every day to your mailbox. See you back here in the next Morpheus Crypto video.